rental market is currently very buoyant and strong. We're having good supply, lots of new product coming on stream. Everywhere you look around downtown Vancouver, there are lots and lots of cranes and lots of high-rise buildings nearing completion. We've just had a couple recently. The Melville has just come on, and a luxury building in Cole Harbour, and we're fortunate enough to have quite a few suites in there for rent. We've rented several of them. We are feeling a little bit of resistance in some of the price points though, both there and in another building that's just opened, Henderson Development's Forenza, which is in the other end of the downtown, close to the stadiums and on the edge of Chinatown and Gastown. We're finding that owners are now paying more and more, investor owners that is, are paying more and more for their properties, and they're hoping to recoup this in rents. But the reality of the situation is that wages haven't increased as much as property values have increased, and the resultant is a lot of owners are asking now, trying to push the envelope to $2.50 and beyond a square foot. A couple of years ago, $2 a square foot was considered the norm, or even sort of a premium rent. We've been averaging probably $2.20, $2.25, but now, as I say, they're pushing the envelope to $2.50 and beyond. What's happening is that individuals are now moving into one-bedroom apartments and maybe sharing. Much the same, I saw this when I was young in England and in London and in New York and various big cities. People double up or quadruple up even, they used to do in London, because the rents were just so high. So we're seeing more of that now. One bedrooms and studios we're finding a very strong demand for, but the two-bedroom suites priced over $2,000, $2,500 a month, very, very slow. There is so much product on the market that it's becoming increasingly difficult to rent those out. We have to consider the people that are renting, the demographic of the people that are renting and how much they're actually earning. And the reality is that the average person who's living and working in downtown Vancouver is making between $12 and let's say $20 an hour. Somebody in the higher echelons, over $20 an hour, if to put this in perspective for you, that's approximately $45,000 a year. Looking at my tables, I see that if somebody earns approximately $45,000 a year, their take-home pay is only $1,300 every 2 weeks. So to support a mortgage, or rather a rental payment of $1,500 to $2,000 a month for a one-bedroom just isn't possible for them. It's 50 to 60% of their actual take-home income. So people just cannot afford to pay the big rents that are coming out, and I think that we're going to have to see a little bit of a correction in this. As I pointed out to some owners the other day when we were at one of the new developments on the horizon, there were the 4 new towers of the Spectrum development about to be unleashed on the market, which will be 800 more suites, and probably 400 of those will be rentals. So, of course, this is the best form of rent control that we can have, is constant supply of good quality housing. And plus, of course, the possibility of moving into other areas of the downtown and the near downtown, i.e. Gastown and the Near East Side. And the new Olympic Village area, which is being developed. However, those prices between $450 and $1 million will be very difficult to cash flow, as the rents will not support the payments on those kind of suites at this time. There's no way that you can buy a $400,000 suite at 600 square feet and expect to be able to cover the mortgage and costs, which would be probably $2,000 to $2,500 a month, when the actual rental for it is probably $1,450, $1,500 max. Because ultimately, in the Vancouver real estate market, the most important thing that you want to be concerned about is not so much cash flow, the reason you're buying it. The tenant is paying your mortgage for you, or the bulk of your mortgage and expenses, and the asset is appreciating. And over historically, properties have appreciated probably in the 7 to 10% range per year. So there probably is going to be a little bit of a plateau in the market, but ultimately, if you hold for 5, 10, 15 years, you're going to see substantial increases in your equity in your portfolio.